So let's talk about emotions, things that people don't like to talk about, especially men and especially people in cryptocurrency. The main ones are fear and greed, as well as a mixture of other ones within that. So in this video, I'm going to unpack the emotions for you. I'm going to explain why it's very, very important to be profitable via having simple rules, applying the rules, and not let the emotions take over. I'm going to go through one of my challenging years of 2018 in terms of how I pretty much nearly lost it all by not being on top of my emotions, not understanding the rhythm of the market and why it flows in the way it does. Let's talk about greed, because it's the worst thing in the world, right? In my opinion, greed is the killer. It always is. I could talk about this from personal experience recently. I can talk about it from 2016, 2017, 2018. You get the idea, right? Greed is the worst one. It's also a double-handed one too, and I'll go through that in a second, right? So, this is the one. People want to get rich very fast. Very fucking fast. Problem. The reason why this is a problem is because we as cryptocurrency investors are all kind of tuned up to quick returns now. Let's go now. Take my money, make me money. That vibe, right? It's a problem. Not financial advice, but I suggest you go and look at the stock market in terms of traditional market returns versus crypto. Yes, it's very, very different. But I can guarantee there's more chance of you making money in the stock market versus crypto because you're probably going to lose it all due to emotions. I want to come on to that. However, when we look at greed, as I say, there's two elements to this. There's greed of not taking profit, thinking it's going to go forever. There's also greed of buying too much of the wrong thing, thinking it's going to make you money. But the ultimate thing is the greed you find everywhere else. People, content, what people are showcasing. It's all a bit, I know. What do I mean by this? Greed can come in the forms of multiple things. Content creators are creating content that is designed to showcase certain things. Now, the greed in which I am talking about is two-factor. One, your investment portfolio. What do I mean by this? You're not taking profit. You think it's going to go forever, you're getting greedy, and you're not looking at the unrealized potential of actually taking profit. The second one is the amount of content that is now churned out by YouTubers on a daily basis. It's a lot. Some YouTubers, I'm not going to mention any names, none of them are on the screen because I don't look too deeply, is doing a lot of content 3-4 times a day. 3, 4, 5 times a day. Why? Greed. They don't want the subscriber numbers falling, the money that they're making from it and all that kind of good stuff, right? That is the problem. People get greedy and it does get very, very infectious, which is a problem. The second element to this is, as I say, when the bubbles burst, you can see here the depression. Cryptocurrency has a lot of boom and bust cycles. It goes up, it goes down, it goes a little bit crazy. This happens a lot and things do fall. Cryptocurrency is one of the biggest volatile assets you can ever buy. Problem is, people like that. Problem is, people think they're going to get rich over time. Problem is, people get very greedy and they lose it all. Let's talk about fear. Fear is a little bit more complicated, in my opinion. I think greed is worse because you're naturally born to be greedy. I think fear you can curb a bit, but there's two elements to fear. There's a fear of going up and there's a fear of going down, obviously, right? Let's talk about it. Now, when we talk about greed, everyone gets greedy regardless of what you're doing, regardless of life. Same in investing, whatever. Fearful, not everyone will get feared in life because things are a little bit different. When you become a fearful investor, you've got two factors. Factor one, fear of missing out. You've probably heard of that one. Kind of obvious. Oh, I wish I bought more there. Oh, it's going up. But you get the idea. The second factor is fear of it going down and cutting their losses, right? So you can see here, investors can collectively become fearful of further losses and start to sell. Bottom sellers, right? Basically selling at the bottoms. Now, I will talk about why I totally messed up in my life in a second. But as I say, the market will go up, down, sideways, right? People will buy at the tops or get fearful, sell at the bottoms. You need to invert that. Talked about that before. You need to, sell when it's greedy and buy when it's fearful, right? It's kind of obvious when you know how to do it and when you get in sync with the market, when you've learned your lessons, like me. Problem you've got is, as I say, the fear factor is all about two things. Your fear of missing out, you're getting greedy, you're buying too much at the wrong times, and it then becomes a vicious cycle. And that cycle then creates new emotions like anger and jealousy, all that kind of stuff. Then you get the hate comments and people start abusing you, and you start abusing people, and then you call them lucky, and it then becomes horrible and it becomes very toxic. And I think cryptocurrency has become like that, which is a bit of a problem. However, let me know in the comments which one you think is worse. Are you I think fear is worst, or greed? Let me know. So let me show you how I lost a lot of money, right? Just by something very obvious. I invested here. Let's keep this simple. Roughly start of October 2016, you can see the prices. Whoop-de-doo. I made a lot of money. Going fast forward a couple of years into the peak of that cycle, which was bonkers. Just going to say that. Now, in a couple of weeks, let's just fast forward it and look at the percentage of 7 days. You can see prices are collapsing rapidly. Why? Because I didn't take profit? No. Why? Everyone was fearful? No. It's just the way the market was. It became a part of a cycle narrative. CME futures came live. Sell-offs, liquidations, stop losses, fearful investors, people who got greedy, they didn't take profit, they started to sell, they panicked, and it started to snowball out of control. Let me show you on the technical side of it. This is a Bitcoin chart. Looks pretty good, right? So as you can see here, roughly around this sort of point here where my cursor is, I was investing. It went, and obviously it melted, right? Lucky enough, I plugged the gap and I was able to sell. Even though, going back, I said, well, this is kind of the worst thing to do. It can be if you do it at the wrong time. You need to try and get out at the right time. Luckily, I was able to get out just about. Problem you got is not everyone does, and they hold it to the floor. Luckily, though, with Bitcoin, you survived if you held on because you bought a good asset. Caveat to this, not all assets will do what Bitcoin done or Ethereum in them previous cycles, right? Just saying. Now, when we talk about the technical analysis side of it, I was lucky enough to understand the basics of technicals regarding, lower highs and stuff like that. You can see it in previous cycles. This is obviously the Mt. Gox situation. There's always going to be a pullback up. Luckily, I was able to get out around this February time and sell, and also in this April, because I remember it very much thinking that's kind of a gift. The problem you've got is, in the future, you cannot tell what's going to happen. You've just got to kind of get out. Luckily, though, and as I said before, we've been in sync with the market and fearful and greediness and all that kind of stuff. If you bought at the lows, it's all right. Luckily, I did. I was able to survive a little bit off that and then obviously build a company. Learning crypto became a thing and I was all good. But I was also living off a pot of money that was also depleting over time because I didn't sell everything because I was still fearful that it was going to go up forever. I was lucky enough to sell some and keep some of it as well in Bitcoin, and it obviously went all the way down to freaking $3,000. So yeah, kind of sucks really. The learning point, I probably shouldn't have done what I did, but I did it anyways, and fucking hell, talk about putting yourself in the deep end, Ash. Jesus. Anyways, in terms of the technicals, what you need to look for is obvious. Moving averages, weekly time frames, all that kind of stuff. If you're below it, there's a bit of a problem, basically. That's what I want to say here. Lower highs are good as well. Look for structure and lower highs, as well as other indicators such as the RSI and stuff like that. The big underlying problem is weekly time frames take forever to get to those points to kind of notice it. But the emotion in you should also trigger the exit and the entry, which is the point of this video. If you think you've made too much money, don't go off the technicals, go off gut. Go and think, hold on a minute, I bought Bitcoin at $600 here. I should be taking profit when it's around $17,000, $18,000, $19,000, right? Yeah, that didn't realize in my head at the time. I know, idiot. Does now though, realistically, right? I know there's a lot of people that are like, oh, buy Bitcoin, never sell. But let's be honest here, I would always take something off the table to potentially maybe rebuy back low. I know there's tax elements to it, but it's all about playing the emotions in the market. Buy when it's fearful, sell when people get greedy. It does work. And let me prove it. So you're probably wondering how I made it all back and I'm in a much better position now. Yes, I built a company. Yes, I built a YouTube channel, but ultimately rules and things in my brain process changed just due to the fact of the obvious here. I learned what to do because I made a lot of losses. A lot of people make a lot more money in their second cycle because you understand the first cycle and you've understood what has gone wrong. Now, some of the rules that I put in play are relatively straightforward. If I buy an altcoin to look at dominance, for example, If I'm looking to buy an altcoin or any asset, I look to buy at key levels of support using the weekly time frame. They're big rules to have. The thing that really changed it for me though was having a bit of an exit strategy in terms of being able to take profit on the way up in little intervals versus just buy low and sell a big chunk at the top. No one can predict the bottoms or the tops. You can buy resistance, problem. You can buy or sell at support, problem. But not anyone in this market will understand the gravity of that in terms of if the price does something at it, if that makes sense. You can't foresee the future. Yes, there is resistance levels. Yes, there is support levels, whatever. These indicators that will flag up. There'll be influencers talking about it, obviously. There'll be news that could react the market, yeah. But no one is perfect. It's all a game of participation, which is all fear and greed because people have emotions, right? So if you look at the market and look at the news, you're probably going to know something. You could probably argue, well, Ash, why did it go this low? Well, what was happening in this time period? Luna crashed. What happened down here? Well, a little curly-haired guy who ran FTX caused a bit of an issue in the market. Yeah, I know. Crazy, right? That is kind of going to give you an idea. Why was the market fearful? Because of that. Get the idea. So what you need to start doing is buying as far away from all-time high as possible. If you think it's a good opportunity because you think it's undervalued because you've done your research and you've found that it's good, maybe it's a good time to scoop up some of that. Is the dominance high? Is it low? Whatever. Problem is people don't do it. If you are then looking to take profit, well, why aren't you just doing some simple kind of strategic levels of interest where you think, right, in this time period, we've melted to the floor. Okay, no one can predict the bottom, but ultimately you could have other orders down here just in case it goes lower. Buying into that fear, right? Now, it starts to go up. Look at some key levels of resistance. First level, like you can go from top to bottom. Obviously, you got one at the all-time high. Yeah, obviously. Now, there's other obvious genuine levels. What about this level here? Why not? Right? What about this level here? Because levels of support and resistance, you probably argue, make it a little bit bigger. You know, those are going to help you get out the market correctly and ultimately make some money. Kind of makes sense, right? Why? People will be getting greedy at these level points because it's going to keep going up. Yes, it keeps going up, but just strategically sell little bits to protect your ass because your cost ratio is much better if you bought at these lows versus the people that are aping in right now. All of a sudden, just going to put this point out there, Bitcoin will break probably above this level and it will smash all-time highs and it will probably go on a bit of a run. And then people will start FOMOing. The news will start talking about it. People will get greedy. And if you bought the lows, you can be able to take a little bit of profit off the table and make some money based off new people, participations coming into the market. And the final thing, not technical, just common sense. Be ruthless with your portfolio, right? Most people lose because they're married to their bags because they're greedy in the first place and they're fearful that they're going to miss out because they think it's going to go up to the moon and they're going to be missing it, right? That doesn't work. Now, don't hold too many. Be ruthless. If something you do not like, someone farts out of place or sneezes at the wrong time in that organization of whatever DAO it is, altcoin, whatever, sell it if you don't like it. I've recently sold stuff because stuff has changed in the infrastructure of the market or stuff has changed in my opinion of it. Doesn't bother me if it goes to the moon. I've made my decision. I've made my bed. I'm going to live with it, right? Too many people are scared to do that. If you jump to something that's better, there's a good chance you're going to make more money. Now, people look at price action for that. The last thing you need to look at is price action. Some things are undervalued because they're undervalued because they're undervalued. That makes sense? Probably not. Their numbers elsewhere are good. Price action is the last thing you want to look at, especially in crypto, because we have narrative bull markets, we have narrative bear markets too, where things are hotter than others at certain points, and eventually the sun will shine onto that project or that narrative, essentially, right? So when we get big, massive green dildo candles, it's great, but ultimately, eventually, we might get a DeFi run because people want to make passive income with profit or liquid staking derivatives, or again, we might get a bit of an NFT boom or a metaverse boom, or maybe something random like Omni chains might take off, or I don't know, freaking AI again. Get the idea? Problem is, people are set on their ways and they'll hold something for 2 years, but ultimately nothing's shining on them because no one's interested in that narrative. You need to start looking at narratives. Have a few assets, but allow them to cross over and multi-chain into different assets as well. But have assets that are actually fixated on a narrative that could well get hit. Get the idea? Don't go all in on one. Don't have like 11 million layer ones. Don't have like a lot of layer twos. Don't have everything AI. Because yeah, you might make a lot of money in a small period of time, but also you may not make any money at all because you're going all in on one narrative. And there we go. Long-winded, I know. A lot of waffle, I know. I don't care. But if you like this sort of stuff, let me know in the comment section. Please do leave a like if you enjoy this sort of stuff. And yeah, there's a video incoming about exit plans, a bit more detail about that, because I think most people miss because of that.